Hello students, welcome to CR Digital Classes. I'm Hashim Ali Khan. So this platform of CR Digital Classes will provide you a number of videos on your subjects so that students can get immense knowledge, complete command on their subjects, and also they can write excellently in examination. That is the main purpose of this platform. Now presently I'm discussing about the topic consignment. So many classes I have taken. I have explained you the problems on cost price method and invoice price method. Normally they will ask the problem to prepare the consignment account, goods sent on consignment account, and consignee's account in the books of the consignor. But once they have asked a problem where it is asking you to write the journal entries. But remember, journal entries are the basic foundation stones for the complete accounting. If you are perfect on journal entries, then easily you can prepare the ledger accounts. Ledger accounts are based on journal entries. So right now, in this class, I'm going to take up one examination problem which has asked you to prepare the journal entries and also ledger accounts. The problem goes like this. Mohan and Company of Bombay consigned to Jyoti and Company, Calcutta. So Mohan is the consigner, Jyoti is the consignee. Goods which they invoiced pro forma at 20,000 and which cost them 16,000. Now you remember, 20,000 is the invoice price and 16,000 is the cost price. So total loading is 20,000 minus 16,000. 4,000 total loading. They paid freight and insurance 800 rupees. 800 is the expenditure incurred by the consigner. Remember, always the expenditure incurred by consigner is the direct expenses only, non-recurring expenses. Then 3/4 of the stock sold by Jyoti and Company for 28,000. 3/4 of the goods are sold by consignee. Remaining 1/4 goods are in stock. She spent 500 towards selling and other expenses. So here 500 rupees are spent by the consignee. So it is a recurring expenses. It should not be considered while calculating value of unsold stock. We should consider in journal entries and also in preparing consignment account. But for calculating value of unsold stock, we should take only direct expenses. Indirect expenses should not be taken. She is entitled to get 10% commission on sales. Write necessary journal entries in the books of Mohan and open consignment account. So it is asking you only to open consignment account, but we will prepare all the three accounts: consignment account, consignee account, and goods sent on consignment account. Come on, let's begin. The first entry when goods are sent on consignment is consignment account debtor to goods sent on consignment. So here you can see the entry consignment account debtor to goods sent on consignment, 20,000. Invoice price. First entry over. Second entry is the expenses paid by the consigner. The consigner paid 800 rupees expenses, freight and insurance. It is given. So entry will be consignment account debtor to cash. Here you can say consignment account debtor to cash, 800. Two entries are over. Now, goods are received by the consignee and consignee has spent some expenses. How much she spent? 500 towards selling and other expenses. So entry consignment account debtor to consignee account. Here name of the consignee is Jyoti. So consignment account debtor to Jyoti and Company, 800 or 500 rupees being selling expenses incurred by consignee. Next comes sales made by the consignee. The sales made by the consignee. 3/4 of the goods are sold by consignee for an amount of rupees 28,000. When goods are sold by consignee, consignment account should be credited. Remember, expenses we will take it on the debit side, whereas revenue we will take it on the credit side. So consignment account should be credited and consignee account should be debited. So entry will be Jyoti and company account debit to consignment. Jyoti and company account debit to consignment, 28,000 being the sales made. Now comes the commission. Commission is how much? 10%. 10% on sales. So sales are 28,000. 10% of 28,000 is 2,800. So entry for expenses and commission is same. The entry will be consignee account debtor, commissioners, consignment account debtor to consignee account because it's an expense. Consignment account should be debited. So consignment account debtor to consignee or Jyoti account. So consignment account debtor to Jyoti account 2,800. 10% of 28,000. That's all. Now we have to find out the stock. Stock on consignment. 3/4 of the goods are sold. So remaining 1/4 of the goods are remaining unsold. So we calculate in working notes the value of unsold goods. In working notes, see here. Working note number 1. Valuation of unsold stock. Valuation of unsold stock. So 3/4 of the goods are sold. So 1/4 of the invoice price. The invoice price was 20,000. 1/4 of invoice price. Invoice price 20,000 into 1/4. That is equal to 5,000. 4 5s are 25,000 plus proportionate direct expenses. Proportionate direct expenses. Expenses incurred by consignor is the direct expense. Whereas here in our problem, consignee expenses are indirect, recurring. So we are not going to take. So how much expenditure incurred by consignor? Freight and insurance, 800. So proportionate direct expenses paid by consignor. 800 rupees he has paid, but we should take proportionate amount. This 800 rupees incurred on the entire goods sent, but how much goods are unsold? Only 1/4. So 800 into 1/4. That comes to 4 2s 8, 200. So total is 5,200. This is the value of unsold stock. One calculation is completed. What is the entry for this valuation of unsold stock? Consignment stock account debtor to consignment account. Consignment account should be created. So now you can see 5,000. First, I'm coming back to the problem. Now, stock on consignment account debtor to consignment account 5,200. Just now we have calculated in working notes. Same 5,200 entry, stock on consignment to consignment. Now we have to remove the loading. Loading in goods sent on consignment and loading in unsold stock. These two entries we require. Whenever goods are sent at invoice price, 2 extra entries will be there. Now, what is the total loading? In working note number 2. Total loading is equal to invoice price minus cost price. Invoice price is 20,000 and the cost price is 16,000. So 4,000. This is the total loading on goods sent. Now, third, loading in unsold stock. Loading in unsold stock is equal to total loading 4,000. How much goods are remaining unsold? 1/4 goods. So 4,000 into 1 by 4, that is equal to 1,000. Now remember, 4,000 is the total loading and 1,000 is the loading in unsold stock. We need the entries. Now I'm coming back to entries. First, we have to remove the loading in goods sent 4,000. The entry will be goods sent on consignment account data to consignment account. Remember the entry. Goods sent on consignment account data to consignment. This is the entry for removing the total loading 4,000. Here the entry is goods sent on consignment account data to consignment, being the excess of invoice price over written back 4,000. Just now I have shown you the working notes 4,000. Now next entry is regarding removing the loading in unsold stock. Entry will be consignment account data to consignment stock reserve. What is the entry? Consignment account data to consignment stock reserve. How much? 1,000. Just now we have calculated in working note. That's all. The first 8 entries we can easily pass. But 9th entry is the profit or loss on consignment. This we can know only by preparing consignment account. So we have to open the consignment account. Consignment account. Now this is the consignment account. Now we have to post the entry. The first entry you have passed, consignment account data to goods sent on consignment. So consignment account debit side to goods sent on consignment. How much is the value? Invoice price 20,000. That's all. First entry posted. So consignment goods sent on consignment account should be credited. Consignment account is debited. Goods sent on consignment account should be credited. So here goods sent on consignment account credit side. By consignment 20,000. First entry completely posted. Now second entry. The second entry is expenses paid by the consignor. Just now we have written the entry. What is that entry? Consignment account data to cash. So here to cash. Expenses paid by the consignor. How much is the expenses paid by the consignor? 800. Consignment account data to cash. Second entry posted. What is the third entry? See the third entry here. Consignment account data to Jyoti and Company. Expenses paid. So consignment account debit side. Consignment account debit side to Jyoti and Company. Expenses paid. How much is the expenses paid? 500. Expenses paid. So consignment account debit, Jyoti and Company credit. So now I am coming to Jyoti and Company account. Jyoti and Company account credit side by consignment. Expenses 500. So consignment account debit side and Jyoti and Company account credit side. This is the expenses. 500 expenses. Third entry we have posted. Now fourth entry, Jyoti and Company to consignment account. This is the sale entry. So Jyoti and Company should be debited. Jyoti and Company account should be debited to consignment. $28,000 is the sale, correct. So Jyoti and Company is debited and consignment account should be credited. So now I am coming to consignment account credit side by Jyoti and Company sale, that is 28,000. That's all. Fourth entry we have posted. Now fifth entry, after 28,000, consignment account debtor to Jyoti and Company commission. So consignment account should be debited and Jyoti and Company should be credited. So consignment account debit side to Jyoti and Company. This is the commission. How much commission? 2,800. Consignment account is debited. Jyoti and Company should be credited. So Jyoti and Company account credit side by consignment. Commission. That is 2,800. We have posted the entry for commission also. Now next entry will be stock on consignment account debtor to consignment account. So stock on consignment account should be debited and consignment account should be credited. Now I am coming to consignment account credit side. Credit side by consignment stock. The consignment stock is 5,200. Just now we have seen in the entry. So consignment account credit side, consignment stock. Next entry is goods sent on consignment account debtor to consignment account. This is the entry for removing the loading, 4,000. So consignment, goods sent on consignment account debit side. Goods sent on consignment account debit side to consignment. How much loading? 4,000. And consignment account should be credited. Consignment account should be credited by goods sent on consignment 4,000. This is the loading, total loading. That's all. So we have posted the entry for total loading 4,000. Now comes to consignment account debtor to consignment stock reserve. This is the removing of loading in unsold stock, 1,000. So consignment account debit side. Consignment account debit side to consignment stock reserve loading 1,000. So we have posted, I think, all the entries. Yes, we have posted up to 8th entry. We have completely posted. Now ultimately we have to find out the profit or loss on consignment. So we come to consignment account. We find out the total of debit and credit side. Credit total. See here. I'm taking the total of the credit side of consignment account, 28,000 plus 5,200 plus 4,000. It comes to 37,200. 37,200. Now debit side total I'm finding out. 20,000 plus 800 plus 500 plus 2,800 plus 1,000. It comes to 25,100. 25,100. Now what is the difference? 37,200 minus 25,100, it comes to 12,100. This is the profit, because credit side is more than debit side. So resulting figure 12,100 is the profit. So debit side you write down profit and loss account. This is the profit. How much profit we got? 12,100. The total is 37,200. That's all. So this 12,100 you can see there in the entry. Last entry, consignment account data to profit and loss account, 12,100. This we got it from consignment account. Now we close the accounts of Jyoti and Company. Jyoti and Company debit side 28,000. Same 28,000 I am taking here. From this, deduct the balance. Balance carried down. So 28,000 minus 500 minus 2,800. That comes to 24,700. Still 24,700 is receivable from the consignee. That is the balance. Finished. Now, goods sent on consignment account should be closed by transferring it to trading account. So here 20,000 is the amount. Here also take 20,000. 20,000 minus 4,000 is 16,000. This should be transferred to trading account. That's all. So we have completed all the journal entries and also all the ledger accounts. Now, one similar problem for your practice I am giving here. Exactly same just now what we have done. But two different points we have. The first different point is the cost price of the goods is 7,500, but pro forma invoice price is to be calculated 25% profit on sale, not on cost. If 25% profit on cost it would have been given, we would have calculated 25% of 7,500. Most of the students will commit the mistake. They will directly calculate 25% of 7,500. Wrong. You should not calculate on cost, because it is saying calculate on sales. Let the sales be 100. Let the sales be 100. So profit will be 25. Then cost will be 75. So for 75 cost, it comes to invoice price 100. For 7,500 cost, how much it will become? 10,000. You can calculate yourself. 10,000 is the invoice price. Cost price is 7,500. 2,500 is the total loading. That is the new point. Second new point is commission. 5% commission on gross sales and 10% commission on sales price in excess of invoice price. Remember, in one class I have shown you how to calculate in the beginning itself. In short problem, we came across this point where commission we have calculated ordinary commission as well as overriding commission. This is a point of overriding commission. If you want the complete information, go back to our previous class on commission, video on commission. In that, you can find this point, how to calculate commission, normal commission and ordinary commission. After that, pass all the entries, prepare ledger accounts. That is for your practice. Hope the concept is completely clear regarding invoice price. So I wish you all the best on behalf of CR Publications.